Everybody, welcome. Let's get started right away. Tesla stock is up 7% to $318 per share. Overall markets, S&P 500 is up 3%, Dow Jones is up 2.7%, Nasdaq is up 4.2%, Russell 2000 is up 3.6%, VIX is down 13% to 19, gold is down 3.5%. Let's see what the headlines are. S&P 500. Give me 1 second. S&P 500 jumps to over 2-month high after U.S.-China tariff truce. The S&P 500 hit its highest since early March on Monday as a crucial U.S.-China agreement to slash tariffs put investors at ease after weeks of uncertainty around the future of global trade. The U.S. will cut extra tariffs it imposed on Chinese imports in April this year to 30% from 145%, and Chinese duties on U.S. imports will fall to 10% from 125%, the two countries said on Monday. The new measures are effective for 90 days. The Reuters, the reduction in fears is a positive catalyst in the short term, but that doesn't necessarily mean much about the economy or the market a week from now or a month from now, said Patrick Kaiser, a portfolio manager at Brandywine Global. There is still uncertainty. It's still hard for companies to make decisions on spending. The market is acting like the risk has gone away, but I don't think that's how a lot of businesses and companies are going to view the situation. Both the S&P 500 and the Nasdaq were set their biggest single-day jumps since April 9, and S&P 500 also surpassed its 200-day moving average for the first time since late March. Mega cap and tech stocks led gains, with Nvidia rising 4.4% and Tesla adding 7%. An index of semiconductor stocks also leaped 6% to an over 2-month high. Apple advanced 5% after a report said the company was considering raising prices of its fall iPhone lineup. Upbeat earnings reports, Trump's softening stance on tariffs, and a US-UK limited trade agreement have helped both S&P 500 and the tech-heavy Nasdaq erase all losses incurred following April 2. The blue-chip Dow has recouped nearly all of its declines too. Wall Street's fear gauge as CBOE volatility index retreated 90 to 19 on Monday, a level last observed before the tariff turmoil in April. 9 of the 11 S&P subsectors were traded higher, though utilities lagged with a 0.8% fall. NRG Energy jumped 24% after the utility said it would acquire power generation assets from energy infrastructure investment firm LS Power in a deal valued at $12 billion. The earnings season is winding down, with more than 90% of the S&P 500 companies having reported so far. Numbers from retail giant Walmart are due later this week. Several Fed officials, including Jerome Powell, are also slated to make public remarks over the week. Traders expect the Fed to deliver two 25 basis point rate cut reductions by the end of 2025. The first cut is now expected in September, according to data compiled by LSEG. Advancing issues outnumbered decliners by 3-1 on NYSE and 2.6-1 on Nasdaq. S&P 500 posted 12 new 52-week highs and 3 new lows. All right. Let's see what other. The yields are up. 5-year is up 11 basis points. 10-year Treasury is up 8. 30-year is up 5 basis points. So there's a bit of a inversion going on today. Oil is up 2% to $62 per barrel. Tomorrow we have the CPI data coming out. Wednesday, not much, just mortgage applications. And then Thursday, we have the PPI and retail sales, as well as initial claims for unemployment, Empire State Manufacturing, Philadelphia Fed Index, etc. And on Friday is housing starts and building permits, as well as import and export prices, and University of Michigan consumer sentiment for May. So lots of economic data coming out tomorrow and later this week on Thursday and Friday. Let's see if there's anything else we need to cover. US-China truce leaves out details on cheap e-commerce packages. Let's look at that. The US and China have agreement to put most tariffs on pause for 90 days, marking a major de-escalation in a trade tit-for-tat that has roiled global markets. Treasury Secretary Scott Bessent, who led weekend trade talks for the US delegation, said both sides have pledged to slash tariffs. US tariffs on most Chinese imports will be cut to 30% from the current 145%, while China's tariffs will drop to 10% from the current 125%, according to a joint statement. Um, I don't think there's anything in here that I want to cover. Let's see if there's any headlines. Oil jumps as traders signal risk back on after China-US trade truce. NHTSA asks Tesla to answer questions on robotaxi plan. Let's read that Reuters article. US auto safety investigators asked Tesla to answer questions on its plans to launch a paid robotaxi service in Austin, Texas in June, in order to assess how the electric vehicle makers' cars with full self-driving technology will perform in poor weather. The NHTSA, in a letter made public on Monday, said it has been investigating Tesla full self-driving collisions in reduced roadway visibility conditions since October. NHTSA said it is seeking additional information about Tesla's development of robotaxis to assess the ability of Tesla's system to react appropriately to reduce roadway visibility conditions, as well as details on robotaxi deployment plans and the technology being used. Tesla did not immediately respond to a request for comment. NHTSA in October opened an investigation into 2.4 million Tesla vehicles equipped with FSD technology after 4 reported collisions, including a 2023 fatal crash. On Monday, NHTSA said it wants to know how many vehicles will be used as robotaxis and the expected timetable for availability of robotaxi technology for vehicles controlled by people other than Tesla. NHTSA also wants to know whether robotaxi vehicles will be supervised or monitored by Tesla in real time. NHTSA's letter asks Tesla to describe how it intends to ensure safety of robotaxi operations in reduced roadway visibility conditions such as sun glare, fog, airborne dust, rain, and snow. It also wants to know what happens if poor visibility is encountered during a ride. The letter asks for details on the robotaxi sensors used for cameras and sensors for the robotaxi system's safe operation when supervised and unsupervised, and whether Tesla complies fully or partially with any industry standards on driving automation systems. In October, NHTSA said it was opening its investigation after 4 reports of crashes where full self-driving technology was engaged during reduced roadway visibility conditions. A pedestrian was killed in Rimrock, Arizona in November 2023 after being struck by a 2021 Tesla Model Y, NHTSA said. In December 2023, Tesla recalled more than 2 million US vehicles to install safeguards in its autopilot advanced driver assistance system. NHTSA is still probing whether that recall is adequate to address concerns drivers are not paying attention. There have been at least 2 fatal accidents involving Tesla's FSD, including an accident in April 2023, in which Model S in full self-driving mode hit and killed a 28-year-old motorcyclist in Seattle area. So, yeah, I don't think this robotaxi service is coming anytime soon, but I guess we'll see. Ekti, what's your question?
So what do you think about the recent stock price of Tesla? It has gone up quite a lot.
I mean, I don't really have a comment on. I think the stock is worth $100. Thank you, Steven. How you doing?
Hey,
What's going on? What's new with you?
not too much. Just thought this might be a good day to talk some macro. Seems like there's been some changes in the expectation of future cash flows for S&P 500 companies.
What do you think?
Um, I think it's going to be really hard to read economic data over the next few months because I think there's going to be a huge amount of demand pull forward. So I expect really good GDP numbers for the next quarter or two. I guess depending on how imports and stuff affect that. As so, I think at a minimum, I think trying to read into how the economy's performing in real time is going to be a lot harder than usual this year.
Mm-hmm. Um, is that it? Anything else on your mind?
No, I mean that was kind of the main thing. I mean, obviously, there's been a lot of speculation out there already as far as how how people react to this. But I think, yeah, the underrated thought through this is if companies are trying to bring a lot of inventory back on shore before the 90 days expire, it could be hard to read into what happens. At the same time, I think this kind of signals. I was expecting a June cut, and I think at this point a June cut's off the table, and I expect yields to stay strong throughout the year um, if this is kind of the base case scenario that we're in right now with a 90-day pause on tariffs. I
Mm-hmm.
guess. What do you think?
Yeah, I don't think it's gonna be a June cut. I think the market's already priced that out. Do you think? I don't think. I
Yeah,
think everyone pretty much agrees with you on that one.
yeah. I think what you said earlier with basically maybe one, maybe two cuts this year is what I think expectations are now becoming.
Mm-hmm. Yeah, yeah. That's what the expectations are. That's right. Um,
So
do you
what do
think
you
it's?
think happens with yields then the rest of the year? Do you think we see three before five, or what? Yeah, what do you think happens with the curve? I have some financial interest in knowing what you think.
um, yeah, I don't see how. I don't know. I don't really see 5% for 10-year. You still think so?
Yeah, absolutely. I mean, what the longer that like as this stuff continues on, I think at the beginning of the year, people were expecting just like last year, lots of rate cuts, and then as the year moves on, we realize no, there's probably going to be hardly any, maybe one, maybe two cuts at best. But let's say economic data shows a lot of strength, and let's show what if like May CPI or June CPI suddenly shows like a little bit of reacceleration in inflation because people are trying to buy before prices go up. Like, do you think the Fed would just say, "Hey, we're not going to do anything"? I don't know. I think all those things would put a lot of pressure on yields.
Hmm. I mean, I think that's already happening, though. I think everyone knows that the prices are kind of jumping a little bit this month um, because of front running. But I don't really know how many people are doing that. I don't think it's widespread. So I think the price effects of these tariff talks are going to kind of roll out throughout the next year, next 12 months or so.
And you don't think that would cause an increase in yields?
Um, I mean, I think that's one of the forces. Yeah, all else equal, it would for sure. I just think the economy's all weak.
But don't you think with the 90 days pause, I mean that'll put a lot of strength behind the economy too. Like if businesses if there's worries about cutbacks and things like that, I don't think really any business is going to be cutting back during this 90-day pause.
Even business will be laying people off. You mean? Is that what you mean?
Correct. Yeah, I don't think any. I think there would be a lot of strength between now and maybe at that 90-day pause, or as we get closer, there'll be worries. But I think between now and then, uh, I think it's gonna be very similar to like the economy reopening after COVID, like with the exception of it not being quite the magnitude. Like I think still see the same forces, but maybe not quite the magnitude of it. So I mean, we're already seeing used car prices rise, and once that starts to rise, then we start seeing the ripple effects of insurance and other things like that uh, go through the economy. So, I mean, the big question would obviously be housing, and housing still seems to be flat. So maybe that's what puts a lid on inflation. But I still think there's a lot of pressure for future price inflation um, as a risk for the next 6 to 9 months.
Hmm. Yeah, Yeah, I think the layoffs will increase soon, starting soon in the coming weeks or months,
Wow,
like
why
this
do you
year.
think that? You don't think the 90-day pause on tariffs changes anything?
No, I don't think so. I don't think people are really like kind of making much decision outside the stock market. I don't think the businesses are making much decisions. Like, these tariffs are going up. You know, like even after today's deal, we're looking at a 30% on imports from China, and that's going to have some inflationary pressures. It's going to have some stagflationary, impact. And I just don't think. I think tens of millions of people are really hurting in the economy. I don't think it's just about the um, you know a few people that might be benefiting, but I don't know. I don't know. I mean, this definitely kind of rolls back some of the wealth effect type of arguments. You know, the stocks bounce a little bit, crypto bounce a little bit, but yeah, a lot of too many moving pieces right now to kind of make a huge call. But it doesn't really change my recession call for this year, though.
I think something that is starting to get priced in a little bit is that it seems people were concerned earlier this year that as Trump was going through these tariff talks, that maybe he was actually going
Steaming got a
to.
call.
Sorry, one second.
It's
But
okay.
what I was going to say is that I think what this did show is that people were concerned that Trump didn't really care about the stock market and stuff, and that he was just going to push forward with um, different policy, even if the markets and stuff reacted in a negative way. And I think we saw Trump flinch at that. And so I think pricing of the left tail has started to go away a little bit as far as like Trump's policies and things like that. And so if that left tail is kind of removed from the risk distribution, I think that that's also why my base case for higher rates and stuff like that is I think your base case for rates should be higher today than what it was 2 or 3 weeks ago.
Yeah. Um, yeah, I don't know because see, here's the thing. I never thought these reciprocal tariffs would stick around. I always said the 10% will probably stick around, but I don't think the reciprocal tariffs will stick around. And as of right now, the 30% tariff um, on Chinese goods is still above my base case, which is kind of crazy, isn't it? It's kind of wild when you think about it. Um, but I'm sure a lot of people in the market were concerned about what you just said, which is the left tail end of the risks. Some of these reciprocal tariffs kind of continue higher, tick for tack kind of stuff continue higher. But that was really, I think that's really not my, that's not in my scenario. I think it's just kind of noise. But demand for Tesla still remain low. It's very low and it's declining. You know, there might be a little bit of a bounce for vehicles in general, but even in that scenario, like even in March, April, when other automakers saw some, boosted their sales, Tesla didn't benefit from that. It's kind of crazy how weak the demand is when you think about it. It's wild. I think Elon made really great damage to the brand in a really major way, and I don't think that's going to go away just because they reduced these tariffs or pause them for 90 days or whatever.
With Trump's announcement of um, reducing drug prices and things like that, that's kind of the other one of my other pillars of higher inflation longer term is that's not necessarily conservatism and old school republicanism. That's very much populist, kind of like what Jem was saying, and that's going to put more, assuming that it actually does indeed cut healthcare prices. That's going to allow people to save more money, spend more money throughout the economy. That's very stimulative. Um,
Hmm.
maybe the changes aren't, maybe it doesn't really move the needle for most Americans, but uh, just at a high level, that's a lot of populism that we're starting to see, and it's not like it looks like there's any case where Republicans cut spending in any sort of meaningful way this year. So as far as like other things to think about, kind of the left tail in um, Doge and things like that, where people were worried maybe a month or 2 months ago that there's going to be hundreds of billions of dollars cut and thousands of jobs from federal workers laid off. I don't think we're really going to see any of that stuff. So,
No, yeah, it's not
um,
happening for sure.
so
It's
if
not.
suddenly there's not going to be any job losses federally and we're going to continue to spend trillions of dollars, I don't really see how there'll be any sort of mass layoffs with fiscal deficits running as large as what they are right now.
Yeah, it definitely delays it for sure. Fiscal deficit definitely delays it. What do you think? Um, what do you think will happen with the tax bill? You think they're going to be able to extend these tax cuts?
Yeah, I think Republicans will dress it up as like big changes and stuff, but I think 90% of the core of it will be the just an extension of the 2017 tax cuts with some small tweaks. I think they might lift uh, the SALT deductions. So I think I could see Trump changing course on that, where he raises, because I think right now there's a limit to like $10,000. I think is a limit for uh, the SALT deductions. So I could see them raising that and just basically doing an extension of that, plus raising the debt ceiling, and all those things are going to be um, again very inflationary. Like there's no signs anywhere that anybody's cutting any sort of spending, and if that's the case, I think eventually
Well,
the
no,
bond market
there's some signs, right? There's some signs. There's the
where
signs that capex plans are being scaled back. They're on pause, right?
yeah, but i- if
Investment is on pause. Hiring is on pause.
yeah, but if the federal government is running multi-trillion-dollar deficits, I think that can make up for some pauses in capex spending and hiring. Like eventually that money is going to work its way through the economy, right? And if suddenly the tax cuts are actually deeper and steeper than what the 2017 ones are, that's going to be even more inflationary.
Well, yeah. So on after that, you get to higher yields, and that's even more pressure on Tesla sales. So how is that helpful?
I'm not saying it's helpful or hurtful for
And I think Trump is also getting rid of the $7,500 tax credit, right?
yeah, absolutely. I mean, I think um, I mean, now that Tesla's over $1 trillion again, I think the risk reward setup isn't nearly as good as what it was a month or two ago. But I think long term, I'm not saying that we'll avoid a recession. I think eventually a recession will come. It's just not going to be as soon as what everybody expects. And I still, after the announcement this weekend, I was always in the 20 to 30% camp, and I think I'm more so in the 15 to 20% chance now that we see a recession. And if we did, it would be probably Q3, starting Q3 at the very earliest. I don't see any way that the economy slips into recession in the next 45 days.
Mm-hmm. And yeah, maybe.
Like, I think maybe my base case now, after thinking this through and talking it out a little bit, would be that as the deficit continues to run high and as inflation potentially ramps back up, eventually that stuff has to come into some sort of course correction. And I think that course correction, maybe in the middle of 2026, would be something that would lead to recession. So maybe a recession in the middle of next year, but when money flows, I think it extends the runway a long ways.
Mm-hmm.
And yeah, and Trump doesn't show any interest in actually cutting anything. So why would if federal deficits continue to run this big, why would you think that there'd be any sort of recession in the next 90 days or even 180 days?
Mm-hmm. Well, I don't know. I mean, Powell seems very concerned about stagflation. You're saying he's wrong.
He said a year ago that he didn't see any stag or inflation, and do you
That's so
remember
true.
that?
Yeah, I remember that. That's so true. And you're saying he's wrong again.
Yes, he's wrong again.
So you're
Although
expecting continued growth and declining inflation rates.
No, I think that I don't think inflation's going to decline. No, I don't.
Okay.
As I've repeatedly said, I think there's a floor to inflation. Inflation, the 2% target isn't really a target; it's a floor. Where, so that's where, like on a broad-based macro view, I agree with Jem that we'll see growth, but I think we'll also see inflation and stuff where growth maybe doesn't keep up with inflation. So I think both those could be true at the same time, where you have inflation at
I think that's what
3
they
to
mean by
5%.
stagflation, though. I think that's what they mean by stagflation.
Yeah,
Higher, 3 to 4% inflation and maybe like 0 to 1% growth rate.
Correct. Yeah, I think.
That's what you think?
There's just too much spending to have.
But see, I don't know how the unemployment rate doesn't rise if you have 0 to 1% growth rate.
Because there's still underlying demand in the economy. There's not large. You need large demand destruction for there to be like mass layoffs.
Can you hear me?
Yep.
Test one. Okay, cool. But the unemployment rate can rise without a mass destruction of jobs, like mass layoffs.
Correct. Yeah. So I mean, maybe the assumption is that the unemployment rate rises like slightly, but that doesn't necessarily mean that it leads to a recession. Like you could see just kind of like what we've already seen, a gradual uptick in the unemployment rate. You could maybe say the economy gets a little bit weaker or a little bit looser, so the unemployment rate rises maybe another 0.5% or so, and that's kind of where it stabilizes, while growth is kind of flat and inflation continues to run higher than what people expect.
Okay.
What do you? That's kind of the base case, at least my base case. How would you say you view differently? Just that growth is actually starting to fall apart, and that the Fed should be cutting in this environment, or what do you think the Fed should be doing based on what your assumptions on the macro is?
I mean, I think these tariffs will lead to some inflation. We don't really know how much, but even with these reduced 30% rate, you're still going to have, maybe 0.5% to 1% increase in inflation rate. So until that kind of works its way through the economy, they can't really cut, I don't think. So Powell's going to speak this week. What do you think he's going to say about um, this kind of latest developments?
I think Powell will say that the labor market continues to be strong, and that they're monitoring price pressures within the economy, and that they'll change their plan according to the data, I think. And he'd probably talk about, he'll probably get questions and stuff at the next presser about how he reads through data with all the different changes that the administration's making. And I think he'll just comment about the difficulty of it. And until he starts seeing signs of the labor market cracking, I don't think they're going to adjust, because I think if he had to pick either labor or prices, I think he cares more about labor than he does prices. How would you say Powell? Would you agree that Powell cares more about the labor data than he does the inflation data?
I don't know. I mean, that would kind of go against what he's been saying, right? He's very focused on getting down to 2% inflation rate. I think personally, he does have a bit of a soft side for labor, I guess. But I think the Fed in general, they care maybe I mean, it is a dual mandate, but when push comes to shove, they do seem to care a bit more about inflation at this Federal Reserve Board, I guess. And that can change. That can change. Who knows? I'm not saying that that's going to be the case continually, but and what do you? So like, go ahead.
You said you think the Fed cares more about inflation than they do employment?
Well, I mean, we do have a restrictive policy right now.
Yeah, but we're still way above 2% inflation.
Yeah.
Like they want.
So I guess that kind of leads me to my next question: is do you think the employment market is as strong as they say this?
I feel like we have a pretty accurate read on the employment market. It's not quite as strong. We can see by like JOLTS data and stuff that it's not as strong as what it was 18 months ago. But we continue to add jobs every month. Although we're not adding 250,000 jobs a month. We're after revisions and stuff. We're probably in the 1 to 200,000 range. So I think the labor market's softer. But if the Fed was serious about uh, inflation, they wouldn't cut as early as they did, and they would have stayed hawkish more between 2022 and what they have now. So that's why I think that um, they, I mean, they say they care about inflation, but no, they just really care about the labor market. I think at the end of the day.
Yeah, I don't know. Okay, so you said that you don't think they're going to cut before they see some cracks in the employment market. Can you be more specific about those cracks? What kind of cracks do you think they need to see before they cut?
I should clarify. I think there's a possibility that they would cut before they see cracks in the labor market, but I think more so the kind of the whipsaw that they've seen with uh, on the fiscal side of things, with the administration putting in and pulling off tariffs. I think that's going to cause them to be more hesitant to make any changes to policy, which puts them in obviously a big box because everybody blames the Fed for being late on everything. And I don't really know how the Fed can respond to any of this stuff with big changes in fiscal policy over a short period of time. So I think there's a chance that they could that they would cut uh, even before labor market starts to crack. But I think the stuff we've talked about in the past, where they're watching unemployment data, they're watching obviously the weekly unemployment claims data. I heard somebody that wrote a post last week that talked about how the Fed had phone calls with businesses in 2020, and I think since then, I think a lot of Fed officials continue to talk to businesses and stuff across the United States between meetings and stuff to kind of get a gauge for what they're doing. And I think once they start hearing from businesses and stuff that there's going to be lots of job cuts or hiring is completely frozen, then I think they'd start to adjust policy.
Okay. Where do you think inflation? Let's do a Steven Utsi dot plot. Where do you think inflation and unemployment will end the year?
Hold on, I'm pulling up what current inflation rate is. I'd guess probably 3% or so this year is what inflation would finish at.
Yeah.
I mean,
So
they have there's a negative month of CPI, and I'm talking just CPI, not core PCE. But if just looked at headline CPI, they had a negative month in there, so that helps a little bit. And I think we'll start seeing some inflation work back through the readings. So I think somewhere around 3% is what my estimate would be.
So then why in the world would they cut with a three-handle inflation rate?
Well, I don't. My expectations aren't for any cuts. I mean, my expectation for that was that there's going to be a lot higher tariffs, and it seems like that's not the case at all. At least my base case from a month or 6 weeks ago was that tariffs were going to stay a lot higher than what they currently are, and that Trump seems to react to markets. So If that's the case, my expectations for that's why that got pushed out. I was kind of thinking May or June for the first cut at the beginning of the year, and now it seems like it's going to be at least fall until there's any sort of rate cut.
You said it's not implausible that the Fed would start cutting without a crack, like without mass layoffs.
Yeah, kind of
Right.
like just like
Hold on 1 second. Sorry about that. Yeah, you said the Fed. It's not implausible that the Fed would start cutting without mass layoffs. But if you think also the inflation rate is going to stick around at 3%, that sounds very unlikely that the Fed would cut them.
yeah, I don't think. Well, let's see what the data says between now and September. But that's probably, I guess, if I had to put a dot on it, eventually high inflation is going to completely like erode growth, right? But I think it can carry on for a while. But I also think that the Fed likes to get ahead of itself, even when inflation isn't necessarily declining. Kind of like what we saw last fall. Like, why did they cut? We weren't even at 2% inflation yet, and the Fed was already cutting.
Well, employment seemed like it was going to crack. That's why. Yeah. I don't know. I think my working theory is still. I mean, I guess let's see. Like, what would change my mind on employment if hiring reaccelerates, right? Then the employment market cracking already is a moot point. Do you expect the hiring? Do you expect hiring to accelerate after today's news?
No, I think it'll stay where it's at.
Right. And you said we're at 100 to 200,000 jobs added a month. I don't know if that's necessarily true though. I think if you, I think it's more like 100,000 right now, 100,000 a month, right?
I think it's a little bit higher than that.
I mean,
So
if you adjust for the, if you adjust for the revisions downward in the last 2 months, I think we're looking at more like 120,000 or something.
yeah, the average of the last 4 months was 111, 102, 185, and 177.
Hmm.
That's 145,000.
Hmm. Yeah.
So yeah, I'd say if my expectations would be, yeah, right around that 140, 150,000 jobs if you had to put me at a number over the next few months.
Okay, so you're basically, if you have 100 to 200,000 jobs a month and three-handle inflation, you think the Fed should start cutting?
Well, we're mixing things. We're mixing what we think the Fed's going to do with what I think they should do. No, I don't think the Fed should cut right now.
Okay, you think they will start cutting though, even though they shouldn't?
Correct. I think there's a chance that I think base case, I don't think the Fed plans to cut at all. I agree with what the market's saying that the expectations for cuts aren't until the fall, and they tend to want to get ahead of themselves and start cutting before they maybe should.
Hmm. Yeah, yeah, we'll see. I guess we'll see.
What are your thoughts on what you think the Fed should do versus what your expectations for what they will do?
Um, I think the inflation will be a bit higher than you think, and therefore I don't think, and I don't think they will cut. I don't think they should, or I don't think they will cut for now. But I think the employment market is weaker than people realize. So um, maybe I'm wrong on that. I guess we'll see, right? Um, I think small businesses are hurting. I think people in their 20s, 30s are hurting. The baby boomers are still safe, especially with the stock market's recovery. I think they're probably going to continue to spend a little bit on healthcare, travel, etc. But I think that you know the millennials and the Gen Zs are in bad shape. Um, you talked about deficit spending. Um, I guess that's I think that's set to decrease a little bit, right? Because of these tariff collections and I think that's supposed to be decreasing just a tad. It hasn't started yet, but I think that's supposed to be decreasing a little bit. But it's definitely not growing. I don't think deficit is going to grow to more than 2 trillion. Do you think it's going to be more than 2 trillion this year? Budget deficit?
No, I think the United States collected like 16 billion in customs last month. So I don't know how much you expect that to be on a month-to-month basis, but I think we're talking at max $100 to $200 billion a year in tariff collections. And
No,
on
I
top
think
of things,
it might be more. It might be more than 200 billion.
how high do you think tariffs are going to be?
I think it's going to be in the hundreds of billions of dollars range. So not that much higher, but I think a bit more than 200 billion. Like, look, I mean, he's not the 10%, like I suspected, seems to be the base case for everybody. Even the UK is being 10, even though we have a budget or the trade surplus, which is kind of stunning, isn't it? Like, isn't that fucking crazy?
I mean, yeah, there's a lot of stuff that's crazy right now.
Yeah. And
But
hold on one second. Yeah, go ahead.
I was going to say, the changes that they make with the tax cuts later this year, I think are going to be even more stimulative as far as there's going to be, it's not like they're going to roll back many tax cuts. I mean, I guess there's a chance that it seems like Trump is open to raising taxes for some of the rich that make maybe over $1 or $2.5 million is what some of the rumors are. But the number of people that actually report W-2 wages over $2.5 million is very, very low. Versus the SALT deductions, if something like that would get enacted, or no tax on tips, like all that type of stuff, I think is going to add to the deficit. Obviously, not reduce it.
Right, but like you said, it's not that many people. It's not going to make that much of a difference. Yeah. Yeah. So the budget deficit will continue, but I don't think it's going to grow. I think it's going to kind of grow and continue at this kind of unsustainable. It's still unsustainable, right? I think that's why the rates will probably rise a little bit. And yeah, I think I don't really see how stagflation doesn't play out. So you agree on the inflation part, you just don't agree on the stack part. And your buffer, and you expect 100 to 200, 100 to 200,000 jobs per month. So if it slips just like 50 to 100,000 jobs, you're basically at the stag as well. So you don't have that much of a margin of error in your theory, it sounds like.
I mean, I don't think either of us do, because if jobs start to be shed, I think demand and inflation will come down. Like, I think you wouldn't see the rises of you wouldn't see as much inflation if there was indeed job loss.
Yeah, I don't know. Yeah, one of them has to crack. One of you can't continue to have 3% inflation and 100,000 jobs added per month. One of them is going to have to crack.
But you're saying you could see a scenario where inflation runs higher than 3% and we start seeing lots of job loss?
I think inflation will continue at around 3% for now until we get mass layoffs.
What do you expect on the fiscal side, as far as like budget deficit, tax, debt ceiling, all that type of stuff? Those are kind of like maybe the big three items that people are thinking about, is what's going to happen with the fiscal deficit over the next 12 months, what's going to happen to the tax cuts, and what happens to the debt ceiling.
Well, Elon tried and failed to cut the deficit, and I don't know how others are going to do it if he failed. So the deficit will continue, and the bond market isn't going to like it. Is my take on that.
By bond market not liking it, you mean you think rates are going to go above, the 10 years going to go above 5%?
No, that's not what I said. It's kind of crazy that neither of us had still won that bet from like 2 years ago, isn't it? You came really close. You came really close to winning it, but you didn't. It was like what was it? It was like 10 base. You were like 10 points away, or was it?
Yeah,
Uh,
I think the 10-year got to like 4.9 or so, or 4.85.
yeah,
Let me look.
yeah. It's crazy how close you got, and it just didn't happen.
Oh no, I was 20 basis points away. 4.8 is where it peaked.
Really? I thought it was
Yeah.
4.9 too. Yeah, that's wild. Were you refreshing every tick?
No.
No. You're not as obsessed as most people. I lost my pen. What the hell? Um. All right. What do you think about the housing market?
Inventory is the name of the game. That's been the kind of the metric that I've been following, that and new listings data, and we're starting to see some really big increases year over year in inventory, which is awesome to see. It helps create a more balanced housing market. Um, I think this week they said inventory is up 33% compared to last year, and obviously the more weeks that carry on, the harder it is to continue to have great comps. So you can't run 33% year over year forever. Um, Eventually, I'd expect that to come down, and so I'll probably be watching how inventory continues to perform the rest of the year, keeping in mind that we're still below 2019 levels. So that's why I continue to see, although I expect inflation to be elevated, I don't expect another uh, COVID scenario or anything like that, because as far as like, I don't see massive inflation in housing because there is so much more inventory. But on the flip side, um, I think demand has continued to be weak for a long time, and I think there's a lot of buyers on the sidelines that if rates would ever fall, maybe later this year or next year, I think that could help buffer um, a potential recession next year. Like that's where I could be wrong when I was saying maybe we'll see a recession in the middle of next year. If rates start to eventually come down for some reason, I think you could see that unlock a lot of housing demand.
Yeah.
What do you think of purchase application data being quite a bit stronger this year versus last year?
I mean, it's still pretty much at the bottom though. It's rising though. Yeah, you're right. It's rising for sure. Um, but yeah, that's what I think.
What are your thoughts on housing right now?
I agree with you. I think that we have a bet that home prices will decline this year, and I think I'm going to win that bet. I think you're also coming around to that a little bit, but I don't think you're ready to throw in the white towel.
Yeah, I'm still between -2% plus 2%. I think right around flat would be like there isn't any sign in the data right now that prices are going to fall by more than 1% or 2. If they do, prices,
Okay.
especially housing prices, I think are very sticky. People just don't, if they've bought a house recently in the last few years, they're not going to they're not going to sell them at a loss. They'll just hold them, and especially if they start to build equity at low mortgage rates, they're not going to just sell their house. They just stay in it. Um, and one of the comparisons I've heard is that if you think about the 2008 market, people could sell their house and rent something cheaper. But nowadays, if you bought before 2022, before rates started to rise, a lot of times rent is higher than what your current payment is, and you're building a ton of equity. So I would expect people to take um, what do you want to call it? The if you want to take out a loan against your mortgage, basically a HELOC. I would expect that type of stuff to happen before I'd expect to see prices fall much. Maybe a percent or two, but nothing meaningful.
Yeah. You want to talk some Tesla? What do you think about robotaxis next month?
I think they're going to do something similar to what Waymo does now. They'll release a test fleet of, or a fleet of vehicles that are on the public roads that people can. I don't know if it, like how public, if it's going to be just like a private beta or what they do, but I expect a few hundred Tesla vehicles being operating as some sort of robotaxi fleet in Austin in the next couple months, whether it's like the
Wait,
middle of
not
June
next
or
month? Not June?
I mean, probably, but like Like it
You
might
wanna
take
bet?
them a
Couple hundred vehicles. I'll give you 200 vehicles in June.
200 vehicles. I'm not going to get into the semantics of if, like, I don't know how quickly they ramp. I think they will start a service, whether it starts as like 50 and 100 and then it takes them a little bit to ramp. I think they'll follow a very similar playbook to what Waymo does, as far as like starting small. I don't expect some mass robotaxi rollout or anything like that, but I think they will have some sort of robotaxi rollout next month.
Okay, so you back down from 200, you get a strike. Strike one.
It was more about the timing because I also wasn't set on June either. I was like, over the next couple months, I think you'll start seeing a rollout. So,
Okay.
but I don't really. It doesn't really meaningfully matter if it's like 50 vehicles or 200 vehicles. They'll have somewhere between 50 and a couple hundred vehicles over the next few months operating, and I don't think that'll like I don't expect them to suddenly move to multiple markets and stuff quickly. I think they'll operate that and kind of see how it goes over the first few months. That's kind of my base case right now.
Okay, cool. And anything else? Anything else you want to talk about?
Do you think there's any chance with this tariff stuff that Trump actually becomes like friendly with China and Chinese vehicles could be sold in the United States anytime in the next 12
No,
months?
no,
Any
it's not
no
gonna happen.
chance?
It would kill the entire U.S. industry. That's not gonna
What's your expectations for Tesla's robotaxi business over the next, let's say, 6 months?
So I would be surprised if they start this year. But even if they do, it's going to be like a few dozen vehicles. I don't think it's going to be hundreds of vehicles. And, Waymo is already expanding. I think Waymo is pretty ahead at this point. They may have reached escape velocity.
So you don't expect Tesla to have more than 100 robotaxi vehicles at any point this year?
I said I would be surprised if that happened.
I'd take the other side of that bet that Tesla will have more than 100.
No, you can't do that. You can't do that. You said June, couple of hundred. And I said June, couple of hundred. You said,
I did
no,
not
it's
say June a
maybe a
couple
couple.
hundred. I said over the next
I
couple
don't
months.
know. Okay, and then you switch next couple of months, and then you drop down to like, no, I don't know the number. Who knows? And
You
so it
said
doesn't. Either way, it doesn't matter, right? Either way, it doesn't matter until it's kind of like widespread nationwide adoption and everything. And Reuters just reported, I pinned at the top, that NHTSA is looking for answers, and obviously Tesla doesn't have answers because they don't really have a plan. I don't think so. I think it's going to be a while before robotaxis roll out. In the meantime, you might get semi-production started. Maybe, who knows? Maybe Model Y sales increase a little bit. Maybe they'll do a 0% APR. I guess they shut down production on Cybertruck and Model Y, so they're trying to control supply. And I think financially Tesla's in a bad shape. And I don't think China tariffs going down from 100 something percent to 30% doesn't change that the consumer in the US is sprained and that the Tesla brand is damaged and Chinese automakers are eating into Tesla's market share. Like, these are the fundamentals of the business that are really poor. And so I don't know. Maybe Trump gets rid of the 10% too. Maybe we don't have any tariffs at all in globally. Who knows? But
I
the
think that's a
debt
good place to
ceiling,
leave it.
the debt ceiling issues coming up in looks like in July or August. We're going to have some more uncertainty around budget talks and debt ceiling and tariff discussions with other countries. But a couple of things that we should probably note is Trump is very populist. He seems to have this, he's trying to benefit from the cryptocurrency pump. He's selling his own cryptocurrency to the country. He's saying that he's not going to back down from tariffs, and then he's backing down. So you can't really take his word at face value. And tariffs are set to increase. Even the UK where we have a budget a trade surplus, is now paying more tariffs, and Japan is going to be doing the same. And these are supposed to be our allies. So global trade is going to, decline from last year. So I don't see how that's not stagflationary. All right. Let's see if there's anything else we want to talk about before we hang up. As junk fee ban takes effect, Ticketmaster to show fees more clearly. Okay, Mercedes-Benz CEO, no plans to introduce new earnings guidance. All right. US-China tariff pause may save the year for retailers. Let's see what that says. And then US tariff revenue jumped in April before China de-escalation. Let's look at that. SEC chair says agency plans to create new rules for crypto tokens. EU regulators ask if Starlink is a credible rival to SES until stat. Global pharma stocks rebound as investors see hurdles in Trump drug plan. Pet survey fights tighter standards, weaker demand, finds tighter standards, weaker demand for loans in the first quarter. Let's get that. Trump says China agreed to suspend non-tariff barriers in talks. Okay. China agreed to suspend non-barrier. Okay, let's look at that. BYD factory delayed in Brazil to be fully functional by end of 2026. Let's look at that. Apple plans AI-powered battery management mode for devices in iOS 19. Okay. US budget surplus rises 23% to 258 billion in April. Customs revenue surges. Let's look at that too. Heavily exposed to China, casino stocks jump on trade deal. EU analyzing US UK trade deal for impact on EU global trade. All right, let's look at that too. Retail gains, Wayfair upgrade, NRG Energy $12 billion deal. We talked about already. All right. Retailers may breathe a sigh of relief as US and China signal a truce in their trade war. Kelsey Advisory Group's Joe Feldman told Yahoo Finance the move may have just saved the Christmas season, as retailers can bring in the inventory now and start to get product in. On Monday, President Trump announced a 90-day pause that will reduce US tariffs on Chinese goods from 30 to 30%. China, in turn, will lower its tariffs on US goods to 10%. This brings a new deadline to August 10, which CFRA analyst Oren Sundram calls a positive development for retailers. Many companies are just beginning to prepare critical selling periods like back to school and the holiday season, Sundaram told Yahoo Finance. Sundaram warned the surge in imports over the next 90 days could put upward pressure to ocean freight and transportation costs and cause supply chain bottlenecks reminiscent of the 2021 to 2022 global supply chain crisis. However, it will likely be less severe given the unprecedented nature of the pandemic-driven demand shift. The big unknown is what happens after August 10. Another tariff change can compound issues on top of higher shipping costs and supply chain complications. Okay. Retail stocks rally to pre-Liberation Day levels. Amazon, Target, Best Buy, Dollar Tree, Five and Below, etc. Wayfair and Dick's Sporting Goods. The discretionary-oriented retailers are getting a big boost today, especially the ones that have some decent exposure to China. It went from an impossible situation with 145% tariff to a challenging but manageable situation at 30%, even if it's only for 90 days, Feldman said. For a company like Best Buy, the average increase in cost is now 7% or 4%, assuming the manufacturer absorbs 50% of the tariff. The analyst wrote in a note to clients. He estimated that electronics retailers will need to increase prices by 3 to 5% to offset the effect, which he calls more manageable. Heading into 2025, underlying trends with the electronics category were actually pretty favorable, Feldman said. With the reduction of tariff risk, things could be looking up for Best Buy, he said. With uncertainty still hovering, Walmart and Costco remain top picks for Wall Street. Even with the tariff pause, it's still a 30% tariff that's going to cause some amount of price increases at retail, Feldman said. it's important to look for names that have good management teams with good sound businesses that have opportunity to drive growth and profitability. In the past year, Walmart shares are up nearly 60% and Costco shares are up nearly 28%. Both multinational chains also have large exposure to groceries, up to 60% of Walmart's US sales, which have been largely shielded from tariffs. It's nearly impossible to time the market, Feldman noted, of the best time to buy into stocks. No other retailer really has the ability and scale to do at the size what Walmart can, Jeffries analyst told Yahoo Finance, adding that he also likes Walmart's higher margin advertising business and membership revenue from Walmart Plus and Sam's Club. Feldman pointed to both Costco and Walmart's ability to offer low prices, adding they're still favored to pick up market share in a cautious consumer environment. Walmart reports earnings before market open this Thursday. Costco earnings will be out after the market close on May 29. Feldman also likes Lowe's and Home Depot, which could benefit from a relief rally should discretionary spending recover. Both home improvement retailers report earnings next week. Okay. Let's look at this article about US tariff revenue jumped in April before China de-escalation. The US collected a record amount of revenue from tariffs in April, helping to limit a further widening of the budget deficit, though President Trump's search for trade deals with targeted nations may scale back future amounts collected. The Treasury Department recorded $16 billion in custom duties revenue for April, marking a $9 billion or 130% increase on the same amount a year before. That's the biggest monthly take for customs in at least a decade, according to data compiled by Bloomberg. The jump reflected tariff hikes imposed by the Trump administration, a Treasury official told reporters. Trump on April 2 unveiled reciprocal tariffs on dozens of countries before putting all of them except China's on pause a week later. Liberation Day also featured a new universal 10% baseline levy. Monday's data came out hours after the US reached a tentative deal with China to remove a swath of escalatory tariffs. Treasury Secretary Scott Bessent and US Trade Representative Jameson Greer announced that American levies on Chinese goods would come down to 30% for now, from 145% last week. Last week, US reached a trade agreement with the UK. For the first 7 months of the fiscal year, the federal government logged $1.05 trillion deficit, a 13% increase on the same period a year earlier after accounting for calendar year differences. Taking out some deferred taxes that had inflated 2024 revenue, 2025 deficit is 4% wider, a Treasury official said. Rising interest costs on the public debt, along with the steeper outlays on categories including Medicare and Social Security, continue to account for a large share of the added borrowing needs. Besides customs, another revenue category seeing an increase in fiscal year is excise taxes, which have climbed by $10 billion over the past 7 months. That's largely thanks to a new levy on stock buybacks, a Treasury official said. That tax was enacted as part of Biden administration's 2022 renewable energy package known as the IRA. Interesting. All right. This article is about the Fed. Fed survey finds tighter standards, weaker demand for loans in the first quarter. Top US bank lending officers said credit standards tightened over the first 3 months of the year, according to a report released on Monday by the Fed. During the first quarter, banks reported on balance tighter lending standards and weaker demand for commercial and industrial loans for firms of all sizes, said the central bank's latest senior loan officer survey covering activity during the first quarter. Okay. Trump says China agreed to suspend non-tariff barriers in talks. US President Trump said China had agreed to remove non-tariff barriers on US imports as he announced a de-escalation of the trade war in Beijing, suggesting even greater concessions could be in store if talks progress. China will also suspend and remove all of its non-monetary barriers. They've agreed to do that, Trump said at the White House on Monday, following the first publicly known talks between the countries since the start of a crippling tariff fight. Trump's comments suggest a possible willingness by Beijing to roll back the myriad regulations, export restrictions, and ownership rules that complicate foreign investment in the country. Though the US president has made hyperbolic claims about the progress on trade negotiations in the past. The agreement negotiated between the Chinese delegation and the Treasurer Scott Bessent and US Trade Representative in Geneva simply announced both countries would temporarily lower duties to give them more time to negotiate. The president offered no specific details on which barriers the Chinese had agreed to dismantle in the closed-door discussions, while acknowledging that the discussions ahead will only be more complicated. It's going to take a while to paper it. That's not the easiest thing to paper, he said. In a joint statement, China said it would suspend or cancel non-tariff countermeasures imposed on the US since April 2, when Trump unveiled sweeping tariffs on dozens of nations in the action he dubbed Liberation Day. That is seen as reference to Beijing's addition of 7 rare earths to its export control list. Removing those restrictions was a priority for Washington to alleviate pressure on a number of industries. Overall, the combined 145% US levies on most Chinese imports will be reduced to 30%, including the rate tied to fentanyl by May 14, while the 125% Chinese diesel to drop to 10%. Trump also said that he would speak to his counterpart maybe at the end of the week. The talks in Geneva were very friendly. The relationship is very good, Trump said Monday. We're not looking to hurt China. China was being hurt very badly. Stocks jumped, and the dollar headed to its best day since November as investors bet that the US-China truce marks the end of an all-out tariff war that saw the two countries exchange tit-for-tat import taxes. S&P is up 3%. Treasury yields climbed as traders lowered the Fed wagers to just 2 rate cuts in 2025. Still, Trump offered a dose of caution, saying that the tariffs could still go above 30% level at a rate substantially higher if talks over the next 90 days fail to secure an agreement. Trump in April unveiled, etc., some history over there, escalation comes, etc., etc. Trump cast the ease tariffs as reassuring for businesses, saying he had already spoken to Apple's Tim Cook earlier in the day, and the tech CEO was boosting the company's investment in the US. Apple is weighing whether to raise prices for an iPhone lineup coming this fall, Wall Street reported, while trying to avoid the perception that any hikes are tied to US tariffs. And then this one about BYD factory delayed in Brazil to be fully functional by the end of 2026, says the official. Interesting. Chinese electric car maker BYD's new factory in Brazil will be fully functional by December 2026 after its operations were delayed because of an investigation into labor abuses. Bahia State Labor Secretary Augusto Vasconcelos said in a video on Monday. By the end of this year, the factory should start producing cars from semi-finished kits, he said. A new schedule is being established so that by December 2026, the factory will be fully functional with the expectation of generating 10,000 jobs. The news comes as Bahia governor travels to China with President Luis Silva, discussing plans for BYD and the auto industry. BYD's investment in Brazil, its biggest market outside of China, aims to turn a former Ford factory into a manufacturing complex with capacity to make 150,000 electric cars per year. The project was tarnished in December with accusations of labor abuses at the worksite. The Chinese company's bet on Brazil includes the acquisition of mining rights to areas rich in lithium, a mineral commonly used to build EVs. The plant was expected to have started making cars in Brazil at the beginning of the year, but delays involving the labor probe and heavy rains affected the timeline. To assemble the vehicle from the imported kits, BYD is set to hire around 1,000 workers, far short of the 10,000 Chinese firm first promised. Okay. US budget surplus rise 23% in April. We talked about this. some tariffs, some excise tax due to buybacks, which is crazy, I think, but okay. EU analyzing US UK trade deal for impact on EU global trade. The European Commission is analyzing trade deals struck last week between US and Britain for implications for the 27 nation European Union global trade. The United States and Britain announced a deal to lower tariffs on some goods last Thursday, with US levies on cars and steel being cut, and both sides gaining better access to agriculture markets. We are currently closely analyzing content to assess its potential implications. Okay. The EU itself is in negotiation with Washington on its own trade deal that would replace 20% across the board tariffs on most EU goods and 25% tariffs on steel and aluminum and cars and car parts. The US has set a 90-day negotiating window ending on July 8th for a deal. Until then, tariffs on most EU goods are 10%, except a higher 25% rate on steel, aluminum, and cars. Negotiations between EU and the US are ongoing, and we aim to make use of this 90-day period, the EU person said. All right. Let me see if there's anything else we got to talk about. I think Kevin Weber has a comment on YouTube. I've been expecting Elon to lay off workers in Q2, Q3. What do you think is the chance that he closes some showrooms? He tried to close all showrooms once. Would not be surprised if he did that as an irrational emotional reaction. Yeah, I don't think he acts emotionally or irrationally. I think he has a plan, obviously. And yeah, I think we could see some layoffs. I think we could see, I mean, they already shut down some production for Model Y and Cybertruck, and the demand is not really coming back anytime soon. I think there's going to be some layoffs at Tesla. All right. Thank you very much, everybody. And I will chat with you all next time. Take care.